Good afternoon. My name is Daniel Ang, investment analyst for Phillip Futures. Since July, oil prices has fallen from over $100 to $60, and because of that, I'm sure everyone is very eager to know where crude oil could bottom out. So, in this market watch, we'll be exploring how low Brent Crude can go and how you can catch the reversal. Our price targets for Brent Crude is between 50 to 53, and believe this could likely happen in the second quarter of 2015. We got this price target through a close examination of past price movements and believe that a very strong price support will happen at this range, and thus predict that prices could reverse by then. This is a graph of Brent Crude with our support levels. We believe that there will be price supports to be seen at 58, 54 and 50, as historic prices tend to show great reluctance here. Another trend we have noticed is that crude oil prices have never reached below this trend line drawn here. By taking a closer look at historic lows since 1990, we see prices tend to rest nicely here. This leads us to believe that another support will come at 53. This trend line reflects inflation in the price of crude oil, as well as the increased reliance of crude oil in the world today, therefore suggesting that prices could reach 50 before any reversal could be expected. However, some still believe that the bottom of crude oil prices could be at $40, which was the low of the 2008 financial crisis. The main difference between the 2008 financial crisis and now is that in 2008 there was a heavy sellout due to panic. The market we have today is different, as the factors that lead to Brent Crude's demise is clear. Supply simply exceeds demand. Hence, we would very unlikely see the same massive sellout we had in 2008. Therefore, it points us towards a price above $40. As for the time frame, we choose the second quarter of 2015 for two main reasons. One, OPEC meeting is in June, and that would drastically affect prices depending on what OPEC choose to do to their crude oil production. And two, we have never seen crude oil continuously slide for the whole year since 1990, and considering that it has been near to half a year since then. Therefore, this means that it is very unlikely that crude oil prices will continue to fall. Thus, this leads us to believe that deadline for a reversal would come in the second quarter of 2015. Of course, with oil prices already so low, there is always a chance that a reversal could take us by surprise. With that said, we believe there are three signals we could look out for to predict a change in trend. On the supply side, I would expect to see drops in crude oil production from the US because shale oil is estimated to be the most expensive form of crude oil production methods. Another form of supply side alterations could come from OPEC, being the biggest exporter of crude oil. And on the demand side, we will be focusing on China, Japan and Eurozone before we expect to see crude oil demand improve. Remember, only when demand exceeds supply, then we will see a reversal. For more information on risks and returns of investing in crude oil, you may approach any representative from Phillip Futures for further discussion. With that, I've come to the end of the presentation. Please subscribe to us on our PhillipCapital YouTube channel and Facebook. Stay tuned for more Market Watch videos. Thank you.